me hang up before YouTube takes my video down. 1 second. Wait for it. So why am I playing this song? Because somebody asked me. Well, somebody that wants this actually said, how come you just don't blast out the trades that you're going to do before you do them? And I said, because I have no idea what I'm going to do. I have an idea, but I don't want to trade on what I think's going to happen. You know what happens then? You lose. Thinking is way, way overrated, right? Or let's say, well, no, I guess you have to think it out, right? But doing what you think's going to happen, you know what that's called? Gambling. You want to gamble? Bet against the Yankees every game because they're a 500 team. Chances are they'll have some winning streaks, but chances are they're a 500 team. So inevitably you'll come out ahead as long as you consistently bet against them. That's gambling, but chances are you'll come out ahead. What we do, right? We take the gambling notion out of the trade. There is still an element of the unknown because you don't know something's going to happen. But when you trade chart patterns algorithmically and those chart patterns replicate and you see something happen most of the time. So if you're trading, think of it this way. There are trades that set up throughout the day that work 75% or 80% of the time, which is beyond what you need. These trades are working 100% of the time, which is ludicrous. Inevitably, some of these are not going to work. I'm talking about the fade reversals, all that stuff, the 1 minute multi-day VWAP reversal, the faux show bros. They're working extraordinarily well, right? But still, there are days when they don't work, or you get in early before the real move happens, or whatever the case. You address your risk, you take your loss. But when you're trading this setup that works very well most of the time, it's as if you're going into the casino and the roulette table says, hey, you with the face. Who, me? Yeah, you, come here with the face. Oh, okay. I like your face, he says. For the next 25 minutes, only the numbers 11, 17, and 23 are going to hit. And then you ask the guy, what do I do? And then he smacks you across the face. What do you think you should do? You should bet those numbers for the next 25 minutes. There's a good chance they're going to hit. What do I do after the 25 minutes? Run. Take your money and run. Because I don't know what's going to happen after 25 minutes. That's what this setup's all about. When you see this setup, fake out, shake out, breakout, or the rollover, or a VWAP break on a gapped up stock, you know what tends to happen. Take the trade. Right? Is this just me sitting here, right? So if you came in this morning, you remember 3 months ago when I said, hey, Goldman Sachs tends to sell off the gaps. When it's gapped up, you look to short it. When it's gapped down, you look to buy it. Goldman Sachs, very notorious. Maybe you've waited 3 months for this trade. Maybe you have. Let me show it to you. So you came in this morning and you said, oh my God, Goldman Sachs reported and the market's gapped up. What do I should do? What do I should do? What I should do? You should be looking to short it. See, that's the thought process. Then now thinking, now you don't have to think anymore. So now you have your idea, right? So now what you're waiting for is validation of your idea because you know that thinking doesn't work. Rational thought doesn't work anymore, or hasn't worked in quite some time in trading. What works? Accepting that the market's rigged and knowing that a trade that continuously shows up is what you want to do. So if you're looking to play what's called the fade, right? Because the fade is the trade. Let me show it to you. Because it's the same trade that's been working now since I started trading. And VWAP makes it even that easier to understand, right? So Goldman Sachs. Now, again, trading Goldman Sachs, you're taking on some risk here, right? So here's your earnings report. Earnings come out, stock spikes. And then the fade happens. Where does the fade happen? The VWAP break. So if you happen to be up at 7:30 in the morning, which I think most of everybody was, Goldman Sachs gapped up. What are you looking to do? You're looking to short it. When? When it breaks VWAP. Boom. There it is. Breaking VWAP, right? The top of the candles, you're out. Top of this candles, you're second out. If it wouldn't have rolled, you would have taken your loss there and here, identifying risk, right? And then it went from 507 down to 497. You know what that is? That's way more than a day's pay. So even on 100 shares, it's $1,000. 200 shares, 2,000. I think you know how to do the math. But then it starts going up. Kenny, then it started going up. What do I do? Get out. Get out immediately because it broke back down, broke back above where it broke down from. So you want to be covering there. But the way we trade is if you have the money, take the money. Then you can't lose. Now you can't lose, right? So if you shorted it earlier here, you took money as it got to the low of the day anyway. And then it got to 500 and you're taking profit. And then it gets to 497, almost 497.50. Let's say you didn't cover down there because you were waiting for 497.50, which was the case. And then it starts to rally back. You know what you're doing there? You're saying, oh man, I really wish I would have got out of all of it down there, but that's not how I trade. So now I'm getting out. And then it breaks VWAP. And you say to yourself, wait a second, well, I don't like buying stocks that are gapped up, but now it's sold off already, and now it broke back over VWAP. You know what the longs probably did there? Bought it because the shorts are going to have to cover because we know you don't want to stay short any stock that breaks back over VWAP. So there it went. And then it tacks on, and it goes right back to where it came from, pretty much to the penny. And now that it did that, you're thinking one thing. Oh, maybe I get a chance to short this Goldman Sachs. Maybe you do, because when you walked in at 9:15, let's say you're a late riser and you saw it there at 9:15, you said to yourself, oh, cool. Goldman Sachs is gapped up. What's the rule? Gapped up stock that reported earnings, I'm looking to short it. What do I do? I play the fade. The fade is a different trade. Now we're into the 9:30 candle. What are you doing? You're shorting the open, right? It's not a riskless trade by any measure, but now you're breaking VWAP at the open. You're a shorter at 508.75. Top of this candle is 512. You ain't shorting Goldman Sachs without at least risking 2.5 to 5 points, but your reward is telling you that this thing could retrace to 493. So at the time where you grew your nutsack and did this trade, you said, all right, I could short it here at 508. Let's call it 508, risking 4 for a possible what? 493 or a retrace back to the low of the day at least, right? All right, cool. Let's say you didn't do that because you were scared. I don't want to trade the open. I'm scared. All right, so then you get it, and let's say you did short it. It went down there, and then you were forced to cover because it broke VWAP. That's exactly what we'd had to do. Out of the trade there. We were hoping to make more money. But then let's say you didn't short it. You didn't short it the one time, didn't cover, go long. You didn't short the second time, you didn't cover. Then it can't stay above VWAP. That establishes a new trade for you, right? So you're shorting here, 505.50, using the VWAP and these prior high candles as you're out. That's the only thought process here, right? So then it rolls over, breaks down. You got paid again. But let's say you missed all of that because you're still too nervous and the market starts to rally. Look at the rigging. When I say the market's rigged, it's rigged to go back to certain prices. Breaks back over the VWAP. Where does it go? It goes to say hello to the same price from whence it came. So if you're negatively biased the way I am, I'm thinking there's no way, nothing Goldman Sachs is going to do that makes me want to buy it because I don't buy stocks that are gapped up on Mondays. That's my bias, right? So I wait for confirmation of bias, which is VWAP, right? So then confirmation of bias, oh my God, I missed the short here, I missed the short here, I missed the short here, I missed the short here. Is Goldman Sachs allowing me the opportunity to short this stock again at 509? Oh my God, it starts to roll over. Do it! And use the 509 as you're out. Now you have a double top, triple top area. Doesn't mean it's going to roll over, but at least try it. It's confirming your bias. Do it. Right? Or, so, I should have shorted it. Oh, it hit the VWAP and bounced, and now it's breaking. Do it. Now do it. Because now it's confirming your bias with a VWAP break. I heard that's pretty good. Do it. 504.75 gets down to 500. That's 4.5 points. 100 shares, that's $450. 200 shares, close to 1,000. Sure, you had to get stopped out again, but then look what happens. So this whole time, I wish I would have shorted it. 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 Let's say you're still waiting there, still nervous. Goes under the VWAP again, test it, can't stay above it. Now you can do it again. 504, risking what? 75 cents to $1.50. Goes right back down to where it came from. You would have done it again. Same stock, 7 different times, same setup. Staying biased to the short side. Okay. So then same thing with the Qs. You came in thinking, all right, market's gapped up. There's no way I'm buying it, right? You wait for the short. Now look, the short fade. The fade worked. And now let me show you why the market's rigged. See that green candle there? This is why we're doing this recording in the first place. Welcome to the rigging of the market. The market is pre-programmed to what it's going to do. And every once in a while, now more often than not, it slips. And it says, we're going to bring the Qs to this price, the anomaly print, right? So the anomaly print low was 554.06 whilst we were breaking 462. And you're thinking, what the fuck was that? Now you know. The market's rigged. And it's rigged every once in a while, so rigged that it slips with the Fat Finger Freddy trade. We're going to bring this market to that price. We don't know how it's going to get there. It could take the long way home like it did today. But once it confirmed the downside move, and how do you confirm downside moves? Let me show you. First, you got the faux show, bro, VWAP long. You don't want to be on the other side of this trade, right? The fade worked. At this point, you're thinking, oh, man, are we going straight there? But no, you got the faux show, and now you got a cover, and the trade was over. And then it rolls over, tests from underneath. You're feeling pretty confident about going short again. You got paid, but you had to get out. You don't want to stay short back above the VWAP. But then this happens. Triple top break, new high, still rolls over. Ooh, that's real negative because that's the inverse of the faux show bro. Breaks new highs, then rolls over. The faux show bro breaks new lows, then goes up. Same thing on the upside. They try to sucker people in, then it rolls. You don't know it's a sucker move until VWAP break, test them underneath. Do it. Do it. There's your confirmation. Same trade as always. Right? Now we start to get acceleration to the downside. Now you start figuring in, are we going to go to that weird print? We certainly are, Ali. We certainly are. You know, Laurel Hardy. Right? There it is. The same damn price. Sorry. There it is. Oh, you're off by 4 cents. I apologize. No, wait. Were you off by 4 cents? Hold on a second. Yeah, 454.06. I mean, inevitably you got it over here, 06, but the bounce happened at, 18, 17, 10 cents off. All right, so follow what's happening here. So you got the anomaly print, you're a cover, and then on this move, I was hoping to see it not break over 455, so it was over for me. And then it rolled over, and it got to prior day VWAP. The VWAPians understand, hey, there probably will be some buying at prior day VWAP because that's what tends to happen, and look what happens. They overshot to the downside, fake out, shake out, and now we're back into this consolidation, and in this point, nobody knows what's going to happen next. But the easy money is what you're there to do. You want to take the easy money trades like rollovers and breakdowns, covering on the way down. And again, Tesla on the way down was phenomenal, right? There it is. Test from underneath, shuffles, rolls, breaks new lows. And again, you didn't have to go short here. The rollover price break was good enough. And I'm covering here and then here. And then by this time, most of the trade was over anyway. down there at 240, 247.50. And then there was Morgan Stanley, which was my only other trade. And this one, compared to the rest, sucked. Right? So here I missed the short at the VWAP. I missed the range break. So when it broke down, rallied back, and then rolled, I finally got short at 109.35 and 109.25. Absolutely expecting it to roll over and hit the orange line, but it didn't want to go. And I held and I held and I held. And then it rallied. And I was like, all right, looks like they're going to get me at 109.25. They didn't get me. It broke, went back to the lows of the day, and it held again. That's a double bottom. So now I'm like, forget about it. Let's get the hell out of this trade. And we covered for a small win. I was expecting it to be a pretty damn good trade, considering JP Morgan went negative and Goldman Sachs was selling off at the same time, and Morgan Stanley wanted to hold in. So what do you do when the stock's not cooperating? Do you fight it? No, you get out. Simple as that. You have to trade like a machine. This trade is working. Stay in it. Lower my price. If it goes over this price, I get out. If it doesn't go over, I will stay in. That's it. There's no thought process. That's your only thought process. See, that's the difference. You're not trading what you think is going to happen. You have what you think may happen. Then it's violated, and then your thought process is over. It's nice when something happens that you think might happen, but that's just validation of price action. So you're basically just still trading price action. And here you are. Another winning day. And it's nice because I didn't think we were going to sell off. I thought the market was going to stay up at elevated levels, consolidate, crush every short, and rip their fucking heads off until the end of the day, which still might happen. But I didn't even think we were going to give any of it back. I thought maybe we would chop in a 2-point range on the Qs and then just annihilate the shorts all day, all night, till tomorrow, into the next day, just grind their fucking heads into the sand until the last one gives up, and then we sell off again. Because that's how it normally works. Trust me, I'm on the wrong side. I've been on the wrong side of this market sell-off every time for the last 20 years. It never lasts. This one was a self-induced crash, and then he said it was over. All right, I crashed the market. All right, now I'm going to rally it, and now we're right in the middle. So the easy shorting is over. The easy long is over. Now we're back to the grind, which is fine. Right? And then you got Webull, which, once again, just starts with a faux show, bro, VWAP break. And next thing you know, a $33 stock's trading at 65. And when these stocks go into the 40s, they generally go to 60. 60 gets you 80. Right? Right? So anybody that's long this stock is thinking one thing, $80. And if it gets into the 80s, where's it go? 120. And if it gets to 120, where's it going? 150. 150 gets you 180. 180 gets you 250. 250 gets you 500. 500 gets you 1,000. The stock's going to 10,000 today. Because that's how it works. They got 9 million shares in the float. Everybody wants to own it. Why wouldn't you want to own a stock with the symbol bull? I mean, you can look at it two ways, bullshit or bull market, or a combination of both, because all of this is bullshit and you understand price action. Nobody gives a fuck about what these companies do anymore. It's all one stock. Every stock moves together. You got 3% of the market, which are usually these shitty, weird $2 biotech stocks that move independently from the market. But if you haven't noticed, every stock is moving simultaneously with every other stock because it's rigged. That's why every moron makes money in a bull market. No offense if you just took offense, but you should take offense. I'm speaking about one specific person who can only make money when the market goes up every day. You know who I'm talking about. And then suddenly the market becomes volatile and, oh, now I don't know what I'm doing. Everyone's a genius when we go up for 18 straight months without a pullback. Hopefully volatility is here. You want days like today. You want days like Wednesday where you're selling off and then suddenly you have a 12% rally. or Friday, where you had one faux show, bro, in the middle of the day that trapped the shorts, and it was on. It rallied all the rest of the day. This is it. This is nirvana. This is it. This is the best trading that you're ever going to see, ever. And you don't have to be aggressively trading. You don't have to be going from name to name to name. Tesla, Apple, Goldman Sachs, Qs. And maybe you traded some bull and Morgan Stanley. And when the Morgan Stanley trade's not cooperating, you say, shit, I was hoping for a lot more. I have to get out, right? Now we're not short anymore. Just like the Qs, right? The easy money on the Qs happened, past tense. Now you got to sit back and wait. Rally again. Look at the breakdown price. Chances are we rally again, we're going right back to that 258 and change. Anyway, it's easy to do this when you have zero positions on also, which I'm now pretty much flat. I even cashed out of the short strangles. I'm not going to wait 6 months to get paid another dollar or something. You know, I sold some UVXY calls at, $11. I covered them at $5.75. I sorted some of these at $2. They're at 2 cents now. I mean, the easy money has been made. And now we go back to just, waiting for the next earnings reversal. But you have to just address the risk reward when it's in your favor. That's when you place trades. Doesn't mean they're going to work, but risk reward in your favor on a trade that seems to work a lot. That's a winning formula. Not mean, right? That's it. If you consistently do what normally works, address the risk, are ready to take loss when they don't work, that's the winning formula. And then you just go live that life. It's the same day over and over and over again. And some days are just massive, which you're never going to see. You may never see a 12.5% move on the Qs intraday ever again. Really. You might now. But that whole move started with a faux show, bro, and the UVXY falling. And then it went green. I mean, when the Qs broke 443.14, I was dumbfounded. But you had to push the button because it was a massive double top break that I didn't think you'd see for months. And there it was the next day. You see? I think the best part of trading for me nowadays is knowing that I'm wrong. Not if I'm wrong, knowing. Because I'm wrong about today. I didn't even say it out loud because there's no point, because Sid would have been on my ass. He said the market was going to stay flat and rally into the close. Well, now we're selling off. This guy doesn't know what he's talking about. So now I just keep the commentary to myself. Because what's the difference? I love being wrong because I don't trade what I think's going to happen. Right? I'll tell you something. I know what's going to happen with these Yankees. You're going to gamble? What happened to those torpedo bats? Huh? What happened to scoring 12 runs a game? Oh, man, that shit just went away after the first 3 games. They're a 500 team at best, right? 50-50 at best. Why do I keep going back to the Yankees comparison? Because that's gambling, but I do that with a sweet science too. I consistently bet against the Yankees because they're always favored because they're the Yankees, and you get money in your favor, but you have to do it consistently. You can't pick and choose because then you're breaking the trend. So, and none of this, again, there is really no reason to address tweets and tariffs and stuff like that. I think now that we've made it past the major escalation of volatility, I don't think it's going to get like that again. So what if he says, all right, tariffs are back on, and we're gonna nuke the Penguins this time? I don't know. I don't think it would be as bad. But what is scary is that dude on that dude on Fox News. I don't know if it's a real clip or not, but he was explaining tariffs, right? And the other three members on the couch were looking at him. Why are you telling people what's really happening? And I don't know if that was real, but it was fantastic. Have you seen this clip? He's explaining the tariffs and how it affected the guy who sells the toys to the special needs kids, and how the tariffs brought his cost of doing business from 3,000 to 18,000. And here's this guy, his business is going to have to be shut down. And they're all looking at him like, why are you saying these things? I don't know if that was real, but if Fox News is telling the truth about stuff, for me, that's a scary moment in time. The matrix might be a little broken. But I don't know if that was a real clip or not. But I'll tell you what I know is for real. Here's what's for real. There were no deals made. Right? Somebody said to Trump, hey, man, this time you really did break some shit. Maybe you should fix it by just saying you're not going to do this crazy stuff. I really don't like to admit that I'm wrong, because I'm not wrong and I know more about everything than anybody. Wait, hang on. The other phone's ringing. What's that? I better admit that I'm wrong about something finally. All right. Well, how can I phrase it to show that I didn't really admit that I was wrong? Just don't worry about it. Fox will cover up for you. All right. All right. Yeah. All right. We're not going to do the tariffs. All right. Tweet it. But listen, call CNBC. Tell them that we're going to be buying calls on the QQQ first. Make sure they mention Kenny Glick's name. Yeah, he's waiting. He was wondering what to buy, because he knows shorting is short-lived and you're going to die. All right. Hold on a second. All right. Fox News. All right. Wait a second. CNN? Who's on the phone? Oh, CNBC? Yeah, tell everybody to buy calls in the QQQ right now. All right, cool. All right, cool. I did. All right, so now, yeah, they're going to look at it as market manipulation. Yeah, I know, but at least I gave everybody a heads up. Uh-huh. Yeah, they can't prove anything. Oh, unless they're on a... Don't tweet it out. No, the other tweet. All right, just buy the Qs. All right, goodbye. Kind of the conversations that probably happened. By the way, Weeble 69 now, right on the nose, 69. By the way, did you see what happened to Newsmax stock? Right, since they started trying to pump it up on the Newsmax channel, like every other commercial was to buy Newsmax. I'm like, oh man, they're really strong. They're really trying too hard now. And inevitably, the stock will be back to 14 and then 0. It's amazing, really. But right now, bull is all you care about. Oh, wait. Did the market just say we can short something again? All right, this time I'm not doing it. So if we roll over here, it could get real nasty real quick. UVXY needs to be above that 39.09. If it is, ooh, Jerry, you're back. All right, kids, I got to go. So I'm not in anything anymore. Took the easy money and I ran. Tesla short, Morgan Stanley short. And if you are trading this bull, you just hit $70 to the penny. It's all rigged. See how it's going? Half number, whole number, half. Now, if you consolidate between 62 and 70, and I'm talking about 8 points, that's what you're risking here. So between that's 64. 64 and 70, you consolidate here. There's the 62. You consolidate here, you break through 70, it has no choice but to go to 80. And then if you get into the 80s, you're looking at 120. I mean, it's insane. And good luck if you're still in this, because you're very brave. Qs are going negative. Bull don't care. Remember, if you will not live by the law, You will die by the law. Definitely got to film that one day. Tablets of the VWAP, and I come off the mountain with a big fat beard on. And I just throw tablets of VWAP down at the people down on Wall Street. Get a big fat robe. All right, careful. Market is, you're back into the negative on the Qs, man. Nasty. UVXY starts ripping higher now. It's going to get a lot worse. So be the careful. You be the careful also, my friends. And to my friend who was wondering, the alerts, when we do start sending them out, are going to be just like this, if and then. It's not going to say, you must short Goldman Sachs now. If Goldman Sachs breaks this price, then short it with stops here and targets here. And I'm going to do a brief little video with it just to make sure you're on the right page. And then as we're working the order, you'll get a new text update to let you know, here, we covered some here. You want to lower your stop here. And then, because I'm not doing alerts unless they're completely accurate, because the best thing to do is to know. I'm doing stock twits tomorrow. And I'm on the homepage. I'm on the homepage. So I went from not being invited to being on the homepage. I'm fancy. By the way, $70 on this Webull is going to break. Now you're going to go to $72.50. Watch. Yikes. Oh, you want to post for me? Yeah, well, we'll talk more about that some other time. I got to get to a meeting. 72s are trading. Now, if you don't hit 72.50, I'd be mortified right here. 72.36, 37, 72.50 has to be hit. 72.50, I said. I'm actually kind of shocked that it didn't hit 72.50 on the nose yet. 72.37, 72 and 3/8. 3/8 get you half. Half! There it is. 72.50. Congratulations. Thank you. I'll be here all week. So now you sold some at 72.50, right? So now you're thinking 75 to 80 and then 120 on this bull stock, right? It doesn't even matter. Doesn't matter. By the way, if you think you're risking 30 points on this trade because it's up 59, no, you're not. You're risking $2, right? So if you're still buying it at 72, you best be selling it at 70, right? But if you bought the 70, you were risking the 67.50. You just got paid the 2.5. Congratulations. You took the money. Now your stop is 70. If you want to let it breathe, maybe 67.50. And I just wanted to point out one more time, whenever this stock starts to go down, any stock that rallies this much on low volume, inevitably they add more to the float and it will be at zero. This stock will be probably $2 6 months from now, a year from now, inevitably be a penny stock, and then they'll be out of business. Well, maybe not out of business because it seems like a legitimate company, but you get it? They learned their lesson. The Webull Corporation understood, hey, those Newsmax guys had it all figured out. Offer no shares, get everybody involved on the first day, run the stock 17,000%, and then crash it. That's how you do it. That's how you make money. And if you don't think the Webull insiders have an offshore account with their nudnik cousin day trading this stock, of course they do. The ideas of them, the insiders can't sell? Sure, the insiders can't sell. Right.